Quick disclaimer, this video is for educational and entertainment purposes only. I'm not a financial advisor, and nothing here should be considered financial advice. Always do your own research and understand the risks before investing.
Yeah, welcome back to another Bitcoin update. So quickly getting started for today, what we have been tracking is a wave to the downside that could have already bottomed here on the 5th of February, or could be going for a extended bottom over here as well. Basically what we are tracking is a larger corrective bounce to the upside in an A, B, C pattern, where we can most likely touch some of these levels that we were hitting between November and January before we can expect a rejection and a larger degree correction. If you haven't seen any of our larger time frames for Bitcoin, be sure to check those out because we go over this a little bit more in depth. But as we stick here on the shorter time frame, just because we have had a little bit of a downside so far, nothing has been invalidated, but it is starting to lean more and more likely as lower we go that this 5-wave move up and a first wave and a 3-wave move down and a 1-2 setup could be close to invalidation. But the invalidation point is the low of from the 12th of February, which was around the 65,000 level. Once we break below that, because we got to 65,670 today, once we break below this low, then it becomes more likely that this A wave did indeed bottom. There's still a possibility that this B wave is just going for a larger B wave corrective move. Like we always say, B waves are super unpredictable, so that wouldn't be too unusual to see if we do just go for a larger A B wave corrective move. Maybe that could be in a B C and a larger B wave, where we can then begin that C wave to the upside. That wouldn't be surprising to see at all. So I added this support zone, which is between 62,607 and 67,583. Once we break below this support region, well, then it starts to increase more and more that we are going for that extended B wave. Price target for this, extended A wave. Price target for this extended A wave. Well, in the last few videos, we were talking between that 50,000 range from 55 to 56. It can go lower. It can go to a little higher, maybe around 57. Then it bottoms. But once we do get confirmation of that, then we'll add, say, a support region for that just to kind of track it as well. Now, what we want to see to keep this 1-2 setup alive is we need the buyers to get interested. If the buyers are not getting interested, then we will most likely break below this low, go for an extended B wave. If we break below this support region, it's more likely, and we break below this low of February 5th around 62,468 and this support region as well, it starts to increase more and more that this A wave bottoms. Obviously, once we break below 60,000, well, then that is a confirmation that this A wave is going for a extended bottom. Now, what we want to see is a 1-2. We need buyers to get interested, and what we need to see happen is a break above these 3 swing highs that we have formed as we were starting to fall. One at 68,379, another one at 69,988, 70,948, and obviously this swing high at 72,000. So we have a lot of resistance and a lot of swing highs to break, just is why we're a little bit more leaning towards that this B wave could just go for an extension, or that this A wave could be in another bottom, because this second wave, although it is a viable A, B, C to the downside, it's just so much selling pressure and buyers are just not getting interested in this zone, and the price that we have seen being pushed up is just very minimal and only 3-wave movements, so just corrective bounces. So just leads me to believe that it is totally possible that this B wave extension could be in play right now. But once we get a 5-wave move up and a 3-wave move down, that could be the start of that 3rd wave as well, and we need to break these swing highs to verify everything as well. So if we do get confirmation of this 1-2 setup, we start that 3rd wave. If we get a 4 and a 5, that could be all of our A wave and a larger degree A, B, C 3-wave move. Then we can get a larger degree A, B, C to the downside, and then a 1, 2, 3, 4, 5-wave move up in the C wave before we can get rejected. Sorry about that. Before we can get rejected in that C wave. Now, it's too early to tell, but if you're wondering what will happen if we break through resistance in some of these highs, and this high of which we formed in January, well, if you haven't seen some of our longer form videos, check those out. We go a little bit more in depth, but essentially, even in a B wave, because we are expecting this to be a larger degree A, B, C corrective move to the downside, even in a B wave, it can extend up, even get a new all-time high, because they're so unpredictable, and still get rejected as well. That's a totally possible scenario. Our base case is just a touch between these ranges, between 80,000 and 98,000. Maybe we get rejected way before that at one of these swing highs. That's totally possible as well, but our base case remains that we can test some of these highs and lows that we formed here from November to January. Obviously, it's not guaranteed. It's not 100%. It doesn't even need to do that. All it really needs to do is just form a 3-wave corrective move, and then that could be enough to send it down as well. So yeah, that's pretty much everything for this video. Hopefully that was simple. Thanks for watching, and we will see you next time.